Hey guys, welcome back to the Max Spence Business Podcast. Today I have a very special guest, but before I introduce him, if you guys like the content I'm putting out, please like, subscribe, leave a review. It helps out a lot with the podcast. Without further ado, so today's guest is Nick. So Nick is the founder and CEO of Building Investments, Inc. So Building Investments is a real estate investment firm that buys, builds, and rents and manages multifamily and commercial buildings. Nick started with buying a condo building in 2008 and is now developing multi-million-dollar rental buildings in two Ontario city markets. It's great having you on the show, Nick.
Yeah, absolutely, Max. I'm really looking forward to it. Thank you.
Awesome. So why don't we jump in with an intro, for people that maybe don't know who you are and sort of a little bit more in detail what you do. So what's your background and what sort of got you into real estate and multifamily?
Yeah. So my background is simply, my school background is engineering. I went to university to study engineering, but to pay for that university, I was working for a builder as a laborer. So I was the one carrying the bricks, and I was the one carrying the lumber and breaking my back to pay for school, essentially. So that's where I learned what I call the sticks and bricks of real estate. And then I went to university, graduate with engineering and business. And then how did I really get started in real estate investing? What really prompted that? It was really just reading one book when I was in high school, which was Rich Dad Poor Dad. That really just enlightened me to what the potential was. And the two lessons I got out of that book was really simple: is buy real estate and own your own business. That was pretty much the two lessons I learned out of that book. So when I finished university, I went to work as a design engineer, and then part-time, I was moonlighting to go see properties and trying to view them and trying to inspect them. And I was doing this. So I said that, I was working from 8 a.m. to 5 p.m. at my normal job. And then I was working from 5 p.m. to 8 a.m. the next morning to my real estate job. So I was definitely moonlighting for many, many years to be able to start this business. But now I've been doing it full time for 6 years now. Yeah. So it's been great.
Oh, okay. Awesome. I actually saw something really interesting that you did in university. It was it a biodiesel plan or something where you had you were going to raise capital for a biodiesel plant in Ottawa. I don't know if I'm getting that right or not.
Yeah. So my specialty in university was to specialize in alternative fuels. And back then, there was a big craze about biodiesel. So I was really interested in entrepreneurship and business in general. So my thought is, I'm going to build the first biodiesel plant in Ontario. And so what I did is, in university, I did a biodiesel research thesis. And then in parallel, in the background, I was working on this business plan to be able to build this plant for real, like for real. So the cool thing is, I teamed up with a professor on research and on the business side, and we actually went door knocking and try to raise some money and try to get contracts. But when I finished the thesis and the business plan, I found out two things that was still during the craze. And the first thing that I realized was that biodiesel would never make sense economically. So back then, it was a big craze, and all the companies was like, yeah, we'll bring it to the pump. People will convert their cars, et cetera. But today, do you go to the pump and fill up with? Do you sit at the pump?
No,
we don't. We don't sit at the pump. It's nowhere. So when I saw that, I'm like, well, you know what? This business model doesn't work. Why don't I go to work? So I went to work as an employee when I graduated university for, funny enough, for an alternative energy waste to energy company here in Ottawa. So that's where I started.
Okay, awesome. Yeah. That's very interesting. Yeah, so sort of throughout your history, you sort of see you have a very entrepreneurship tendency, right? You're looking at starting this business, then you sort of realize that economically it wouldn't work out for you, and then you sort of decided that let's try this other business venture, which is real estate and stuff, and then that's really worked out for you. So I sort of want to jump now to. You bought that first condo and then you started scaling up. So when did you start getting to the 12 plus units, and how were you raising capital for that? Were you refinancing properties you already owned and sort of bought it, or how were you sort of doing that at the beginning stages?
Yeah, so it's real estate snowballs if you buy and hold. So you get a lot of equity and you can get a really big paycheck if you buy and sell. But if you want to create wealth and long-term wealth and long-term cash flow, you got to buy and hold. I mean, it's been proven for about 2,000 years. So that's the model I'm following. So to be able to scale it to 12 units, you got to start with 1 unit, and that's what I did. So start with 1 unit, and then you buy another one, and then you buy another one, and then you buy another one, and then you do 2, and then you do 4, and then you do 6, and then you do 8, and then you do 12, and then you do 20. Like, it's just, this is how it scales. It's very systematic. And it's not, you don't need to start at 12 and you don't need to start at 1, but you do need to start. So what I recommend to people is find out a good deal, any size. If you're starting out, start 1 or 2 or 3 or 4 units, depending on where you are and how much cash you have and your resources, just in general. And then just start there. And then once you figure that one out, you're going to have some learning. You're going to be able to apply to another property, same size or smaller or bigger, it doesn't matter. And then you just keep scaling from there. And the best way to buy them, to have the capital to buy them, is to be able to buy something that you can afford within your means, or like one of your 2 people that can put their money together and then buy it. And then you simply just roll the money over. You wait a little. If you've done it well, you can refinance, pull some money out, and buy another one, and then just keep growing that way. That has been my main business model, is to be able to create value when I buy, so that I can refinance as immediately as I'm done with the repositioning of the asset, and then we refinance, take the money out, and then go buy another one.
Oh, okay, okay, awesome. Awesome. I like that a lot. And the interesting that I've sort of seen, because I've had real estate investors from the U.S. and also Canada, and I've sort of seen that a lot of the U.S. real estate investors like to raise capital for their for the project. Let's say if they're doing 100 plus, 40 or 50 or 90 or 100 plus units, they like to raise capital for it. Where I see with a lot of the other real estate investors that I've sort of talked to on the Canadian side, one of them being Austin, from a guy, Austin, who's in Toronto. He's scaled from, within 2 years from 0 to 25 units, pretty much by doing the same process. What you're saying right now is just he bought one property in Windsor. He then, refinanced it, went from 1 to 2 to 3 to 4, and he's scaling up, and he's just going faster.
It snowballs.
Faster. Yeah, and that's literally what's happened with him. But for him to actually speed up a bit, he actually to be able to do 25 units in 2 years, he had to actually start rate. So after he did, I think 1 or 2 buildings, he bought single families and then a townhouse and other stuff. He then started raising money from, friends and family and people from work. And that's how we started to scale faster. So I want to sort of get your thoughts on that. Are you currently doing that, raising capital for, because I know you're doing some, I don't know if you're able to talk about them, but you're doing some quite big projects in Ottawa and the surrounding area. So are you raising capital for that? Or is that just from your snowball that you've built over the, the past 6 years?
Yeah, so it's both. You're always raising capital, whether you need it or not. You have to raise capital. You may not take the money, but you still have to put yourself out there. And a great recommendation that I do for newbie investors is I say, whatever deal you have, even if you can close on the house or on a condo or on a big building by yourself, prepare what I call a little investor package, a 1-page investor summary. At the worst, you can give it to your spouse to review it, make sure that it makes sense. And at the best, you can have some conversation with people about, hey, this is what I'm doing. What do you think about a deal like this? And just let it sit with them and for them to analyze what it is and see if it makes sense for you. You don't have to pitch it. I hate to pitch, but I generally just let people know what I'm up to. And then I'll let them decide if they like the type of deal like this, whether or not I'm raising capital for this deal. And that's generally what I do. So I always use an opportunity to prepare what I call a 1-pager, and then just as a summary what the deal looks like. How good is it? Where is it located? Why do I think this is a good deal? And then, quite frankly, you don't need a 35-page essay. You simply, if it is a good property and a good asset, people should know within a couple lines, 1 page, maybe 2 page if you have a lot of pictures. But that's pretty much it. 50% of the page is pictures. The other 50% is bullet points. Why is this a good deal? What am I buying at? What's the value creation? What's the timeline? And what's the ROI? if you can answer this in a couple points, it gets the message across really easily.
Oh, okay. Yeah. So it's like, yeah, 100%. Like, if you're showing multiple investors, nobody really wants to read through a 35-page deck. They want to, get the concept really quickly and to the point. And, is it worth their time to actually look further into this and see if it's actually an investment option? So with that, how have you, so over the years, how have you built your network up? Like, has it been through, meetings? Like, I mean, like investor, like, like I know in Ottawa, there's quite a few investor meetings for real estate. Do you go to a lot of those? Is it sort of like, that's where you get the most of your connections? Is it building good relationships with realtors, property managers, or actually the building owners and, maybe buying them coffee or buying them lunch? Or so how have you sort of built that really good relationship where you understand what's happening in the market and what's being sold and what's being sort of traded?
Yeah, that's a great question. And the answer to your question is that I've done all of the above. And frankly, you should do all of the above. The easiest one is to network with people who raise their hand and say, hey, I'm interested in real estate. So the real estate groups, either online or offline, like in person, these are easy. People are interested. That's definitely an obvious place to start networking. But the reality is that once you start getting into that field, I like to do what I call the 80-20 rule. I like to cut the bottom 20% off of the people who I should stop and try to build greater relationships with the top 20%. So the 80-20, so I cut the bottom 20 off and I focus a little bit more on the top 20%. And over time, these relationships become more and more valuable to me and to those people. And generally, there's just better things that happen as a result of this. You find better deals, you find better contacts, and then you simply just leveling up. So that's how I've done it. So talk with owners, talk with networking groups, all of it.
Okay, awesome. Yeah, those are some good points, and I like the fact that like you're really focusing on the 20 top percent that are like, hey, these guys and girls actually have the same goals that where I want to go. Let's say if it's into larger multifamily or into development or whatever, and sort of you build really good lasting relationships and friendships with these people, which in 10 years can be very beneficial. So I know we talked about this beforehand a little bit, but for a new investor, where can they sort of fit into a deal? And I know you're explaining that to me a bit was, for let's say if, for me, for example, if I go find a deal and I bring it to someone such as yourself, you'd rather pay, let's say, like, I don't know, like, a finder's fee or something like that, or, maybe something else than having somebody, having this extra person in on the deal. That's, it's going to make it a little bit more complicated, right? So with that, where can new investors sort of fit in? Is it like if with the underwriting, finding the deal? Is it, raising capital? What would you sort of say?
Yeah, so to make any successful real estate deals, you need three things. You need money, meaning down payment and bank financing. You need the property itself, the deal, and then you need to have the proper knowledge and the proper people to take it down. So if you have, assuming that you are the proper person to execute on this deal, because once buying is just a very short period of time, owning and managing and running the property is much longer and much more hardiest endeavor. However, everything starts with finding the deal. So people can get into deals if they either find the deal or find the money or bring some of their own money, or that they're the managing partner. They may be an awesome operator. They may be an awesome property manager. So they may come in, they don't find a deal and they don't find the money. They're just like, yeah, I'm going to take this project. I'm going to take it from where it is today to where you guys want it. And I know how to do this successfully and quickly and efficiently. That may be a real value add to the owners. So that is definitely a way for people to get involved. If somebody wants to be part of it, for example, somebody brings me a deal, say, hey, Nick, this deal is off market. What do you think? And I'm interested. And then they want to be part of the ownership of the deal. So I get it. But the reality is that if you own 0.1% of the deal legally, you have to qualify the bank. And then the more people you have to qualify the bank, the bigger it is and the more difficult it is. And the banks are really stringent and they check everything. So as the buyer of the deal, the main investor, if they have say 2 or 3 people that are just having these minuscule percentage, drag out the financing process, which is already now double since COVID hit. So it's really just a drag on the whole process. So it's better and it's faster and more efficient to be able to pay people who find the deal or find capital at what we call a finder's fee or whatever, how you want to call it, to bring this together, to pay them for the value that they've created into this deal, as opposed to try and bring them along. I think that maybe in the future, financing will change dramatically, and then that will be more strategic. But right now, that's really what's happening. So it's really, really difficult. So yeah.
Yeah, 100%. And I understand that from, from an experienced investor's point of view is like, you guys are trying to go fast, right? Like you've already gone through all this sort of stuff. You're just trying to, get this deal done, go into the next deal, and you want speed, right? And it's hard to, it's hard to close a deal, right? In a competitive market when you have, like you're saying is 0.1%, 0.1%, 0.1%, and you're trying to close this deal, quickly, and you have another competitor trying to buy the deal. It can take like the speed away, right? So what are your thoughts on, let's say for somebody, let's say, hey, they find a deal and say, instead of like, doing like a partnership or fee or whatever, right? They say, hey, I'll bring like, this is the deal. Would you be, willing to teach me? Or can I, watch what you do and how you do it, right? Like, is that like, have you seen that from other investors? Do they do that? Do they sort of take that on with, let's say, a new investor if they bring a deal to them and they say, hey, you don't have to pay me anything. I just want to learn from how you manage this deal, right?
So this is a great question. And quite frankly, I think this is a great value add for both people. Listen, that's a little bit how I started. I went to these really successful investors and say, listen, this is the deal I have here. If you're interested, then you can buy it, or maybe I can pay you to just guide me. Essentially, I was asking them to mentor me or coach me along the way for this particular deal. And then you don't need to do 30 deal analysis with these folks. You only 1 or 2 meetings, a lunch or whatever. You can get the essence of what you need to do to be able to make these deals happen. So yeah, and I think it's a great way to be able to network with high valued or highly experienced investors. That's definitely a way to get the knowledge that you need to be able to close your deal, your first one or your 10th one. So I think this is a great. It's easy for the person to say, yeah, I'll take some time, and then and then the investor can get the deal, and then the newer investor can get the knowledge and the experience fairly easily accessed. I'll give you a great example. There's a portfolio from a REIT that they were selling off assets in Ottawa and Kingston, and they were selling 850 units. And when I looked at the portfolio, it was off market. When I looked at the portfolio, I'm like, I'm interested in one building. So about 60% of the units were in Ottawa, and then 40% were in Kingston. I knew 2 people that I think could benefit from those units, about 600 in total in Ottawa. So I reached out to those people and say, hey, I have this. I can't close the whole thing for 600 units, but would this be of interest to you? And the person, one said yes, the other one said no. So the one that said yes, I made him agree to this. I said, listen, I want to buy one of those buildings, which was a 50-unit building downtown. Says, for me to be able to bring you this deal and bring you the details, can we agree that you're going to help me just walk through the path to be able to buy this building, and then you're going to sign it to me before closing? And he said yes, so that he could get 600 units or 550 units, and I would get 50. So that was a strategic deal where it would be completely separated, but I brought the value of these off-market deals from a REIT, and at the same time be able to take a little sliver from these big portfolios. Yeah. So this is a way that you can create value. Same idea.
Yeah, 100%. And that's actually that you answered the question. I was just answering, like when you first started, did you do this? But you're still doing this at but this is a much higher level, right? This is with 800 unit portfolio and stuff. But you're still doing this, which is amazing.
Still doing this. So
it's always it's a valuable skill, right, to learn. So with that,
it's a valuable skill for sure.
100%. So with that, would you say it's better to, like let's say from an like you're a very experienced investor right now. Would you rather take somebody on who pays a mentorship fee? Like let's say if they pay you, I don't know, like however much you want to charge for a mentorship, would you rather take that on, or would you rather take on saying, hey, I found this 50-unit building. I can't close on it, but I know that you can, or is this something that interests you? And you say, yeah. And then you say, hey, for bringing this building to you and just sort of doing some of the analysis for it, would you be able to take this mentorship? Well, would you be interested in a mentorship with me?
Yeah, so that's a great question. The reality is probably a little bit of both is the right answer. Because here's how it is. I coach a couple people on multifamily investing specifically. Don't talk to me about townhouse. Don't talk to me about secondary dwelling units. I only focus on multifamily, and generally it's a bit of a trade-off. So there is some mentorship. There is also a fee for the time. But at the same time, I send them deals that don't fit my criteria, and they send me deals that don't fit their criteria. Because when you're applying the strategies that we use day in, day out, which are some of those strategies that you talk to owners, network, check online, check offline, all of it, you get to know some deals that may be coming up. I'll give you a great example. So this morning I put an offer on a building downtown. 2 days before it came on the market today, I knew that it was coming. So I had 2 days of time to prepare, to review. I walked around the building. I checked in the windows a little bit to be able to get as much information as possible. And then when it came on the market today, my offers were already submitted first thing. So speed is important, but having these little things is definitely a value. But you got to be able to build relationships with those people. To get those kind of things. And conversely, when I know of stuff that coming online or I think is a good deal, I send them to my coaching students, say, hey, have a look at this. Let me know what you think.
Okay. Awesome. Yeah. So yeah, those are all great points with that. Now jumping to, let's say for a new beginner real estate investor, what should they focus on learning? I know they should focus on everything, like, learning the entire procedure, but is the underwriting the most important to learn at the beginning? That's going to give you the best value. That's going to give you sort of the most speed with sort of getting your first deal done. Like, what would you say are some skills that you need to learn at the beginning that's going to get you pretty much the best like ROI of your time spent?
Yeah, so I would say, so again, there's only 3 things you need to be able to make a deal. You need the property, you need the money, and you need the right people to take it down. So I would say it's probably a good idea to try to figure out who is the team that you need. So what I mean by that is the agents, the mortgage brokers, the bankers, your accountant, your lawyer, your insurance broker. So that you can do it and meet those people and just put them on your team. Say, hey, you know what? I talked with a few people, 3 people recommended that you're the best insurance broker. Let's have a conversation, and then they become on your team. So build a team that can be done fairly quickly, fairly easily, obviously without any money until you have a deal. And then the second most important, I would say, is to find a deal. And in my opinion, is to find the deal, because if it's a good deal, it sells itself. Say, hey, I'm buying it for 50 cents on the dollar. We're going to put 10 cents or 20 cents in. So our cost is 70 cents, and then it's going to be valued at $1 when we're done with it. When you have deals like that, they sell themselves, and then generally the money shows up really, really easily when the deal is good. When you have something that's marginal, hey, we're buying it for 94 cents. We got to put in 6 cents of renovations, and then so then your cost is $1, and then the value is $1. Then there's really no real upside created. So so that's why I always say to my students, is focus on finding the deal first, and then you just talk about your deal. Say, hey, this is what I got. What do you think? And then the money shows up. It always has. It has for me, and it has 100% success track record to all my students. That's how they've done it as well.
Okay, yeah, 100%.
Because most people,
pardon me?
Because most people, I think most people are not salespeople naturally. I'm definitely not. So to me, to go sell first and say, hey, put the money in my bank account and I'll find you a deal, hasn't worked for me. Maybe I'm just bad. Probably I am. But so that's the way that has worked for me, is to find a really good deal first, and then I just talk about it a little bit. Yeah.
Yeah, 100%. And yeah, the majority of people aren't like, and it's much harder to try and raise money. And I was talking to a person on the podcast previously. It's harder to raise money when you don't have anything to show, right? It's like, hey, give me, let's say $800,000 or something like that, so I can go, buy this property or something like that. And it's very difficult to do unless you have the property. So pretty much like you're saying is like it like focus on finding those good deals, right? Like, there's going to be tons of deals out there. There's always deals. I know I was talking about a deal with you beforehand, and there's tons of deals that are always, getting, thrown around or something like that. But there's a very finite amount of really good deals, and you sort of want to find those really good deals. And if you find those really good deals, those are the deals that are going to, exponentially grow your business, and also help you bring on, like, you're going to learn so much more, and you're going to have so much more help because people are going to be wanting to come on to the deal, right?
Correct. Yeah. So we talked about this a little bit before we press record here, where I teach new investors to find undervalue and not look for cheap. So there's a big difference between undervalued assets and cheap assets. So cheap is really just the price. Undervalue is that you can create value, and you're buying it at a discount. Essentially, you're buying wholesale for something that should be sold retail. So that's really what the most important thing is. And they're really good deals, just like I was sharing a little bit earlier. They're really good deals. If I get the deal that I put an offer on, I'll know later today or tomorrow if my offer is accepted. But the really good deals, they stay on the market 1 day, 2 days, 3 days, and then it's tied up by somebody like me who's trying to be fast, and then they close. So they don't stay on the market, or they don't stay off market for very, very long. So these are the real deals. But you need to build a relationship first with the people who may have them, and it can be a slew of people. The most obvious ones, obviously, are real estate agents, because that's their business, to find properties and to sell them, buy and sell. And then the second most obvious is probably a mortgage broker. They know people, owners that may be looking to finance or refinance, and they may need to sell assets for something else. You don't know. So these are part of your team, people from your team, and you ask them, hey, do you know of anybody who may be considering selling this type of property? And then you go from there.
Okay, awesome. Yeah. Those are some great points. So really finding undervalued instead of cheap, and with those, it's like speed's the most important with those, and really executing quickly, because those are going to get picked up and stuff. So with that, pretty much, where can you? I know, like, these deals are like, you find them from anywhere and everywhere, right? And you're saying, like, probably the best ones are, real estate agents, and then mortgage brokers. Is there any other interesting avenues that you sort of have found deals that, maybe isn't, like the first thought that somebody has when they go to find a deal? Like, has it been like, I don't know, for example, like, maybe a property management company, a maintenance company, a rental company or something like that? Or is there any other ways that you sort of found these deals?
Yeah. So maybe I'll share the first big deal that I've done, my first big multifamily. So I found this deal. It was actually, I had a great relationship with a junk removal guy. I had a couple of smaller rentals before, and he was there when tenants left trash everywhere. So I call him up, and he'd come in and clean up the place and just junk removal, throw it in the garbage. And I told him, says, hey, if you ever find something in this area that people are trying to sell, because what he does is that he gets in places when people are starting to clear out properties. So he was called on a multifamily building in Ottawa, and the owners were three sisters, and they lived in the building, and then they rented the rest of the units out, and so on and so forth. And he was clearing out the rooms and the units of those three sisters that live there in each of the unit. So talked with them, and then he found out that they were thinking of selling, and he remembered that I was looking in that area. So he simply just told me, say, hey, I think these people are looking to sell. Obviously, nothing's for sale right now. And I ended up buying. This is how I ended up buying the first one. So he's actually my junk removal guy that gave me the first lead on the first big multifamily way back. But now I would say most of the deals are agents, and they hit MLS. The question is, how long do they hit MLS? And sometimes it's very quick. Some of them, I would say 50-50 is on MLS and off MLS. But they do go through the hands of real estate agents, I would say most of the time, 80 or 90% of the time. Yeah.
Oh, okay, awesome. And then pretty much like, yeah, so like as soon as a real estate agent has it, then you already know you're already in the game of competition, because they're messaging a lot of different, investors being like, hey, do you want to buy this? Do you want to buy this? And then that speed really comes in and being able to execute on it quickly.
Correct.
Okay.
Yeah. So one thing I have prepared over the years is what I call my offer template. It has pretty much all the clauses that I think I could be using on an offer. And my agent has my offer template. And funny enough, and my coaching students also have my offer templates. Funny enough, I've started to see other agents use this format in their offers, because I've reviewed the offers of other people to say, hey, I have this, what do you think? And then it's the same freaking template, line by line. So it looks like it's efficient and it's effective. But anyway, so the cool thing is that when you have an offer template of the standard clause, you can simply just tell your agent, hey, I want clause 3, 4, 5, 6, remove 8, 9, 10, and this is my offer, here's my price. And he can prepare everything really quickly when he knows your general conditions and your general terms that you're looking to use and reuse. So that's one of the ways that I'm able to have speed, is I have an offer template with all the sections of the offer and all the clauses that I can think of, and I remove the ones that I don't need for the specific offer.
Oh, okay, awesome. And actually jumping into that, do you use so I know in the US and some people use LOIs. Do you use LOIs at all, or do you put is it purchase and sale agreements that you use, like for, let's say, like an LOI is more of like, a gauging interest of a potential seller, or do you just always do purchase and sale agreements?
Yeah, so I've done a couple LOIs in the past where it was some bigger deals, but frankly, I would say 99 out of 100 times, I think I've only used LOIs twice in the 12 years of real estate. And the reality is that at the end of the day, you want the LOI, and you're going to convert it into a real offer at some point. So why not just throw them a real offer and say, this is real. Sign at the bottom, and I'll send you a check to your lawyer's office. So that to me has found to be just more straight to the point. So we have everything in there. I like to discuss the deal first with the agent or with the owners directly to see how they would want to structure it. And then I go from there. One thing, maybe I'll share something with your listeners. One thing I always do is I do 2 offers at the same time. And generally the 2 offers vary on price and then terms. One has a low price, and then everything really clean, everything really easy. And then one has a higher price, generally very close to list price, maybe sometimes even above if it's really under market. And then I have a lot more terms. So I always give them 2 offers. The reason why I want to do that is because I want them to pick me. If they have 3 offers, and then if they have 3 people, and I'm one of the 3, so the other 2 providing 1 offer, and then I'm providing. Sorry, I had a call coming in. I have 50% of the chances getting my offer selected. Okay. If there's only 2 people, then I have 66% of the chances to getting my offer. I mean, I have 2 out of the 3 offers. So this is a strategy I use all the time. Every single offer I've ever done has 2 offers where I change the terms and I change the price, and see where they buy it on.
Okay, awesome. And with that, like, let's say a new investor maybe doesn't know all the clauses that should be in there or how to sort of structure that perfectly. Did you have a lawyer to do that? And I also know it gets, like, let's say if you're doing like a syndication or something where you're raising capital for this purchase, it gets a little bit complicated because you have to have like with the syndication offer, it's like you have to have the limited partnership agreement, and I'm not 100% too sure, but it gets a little bit more complicated with how the lawyers have to draft that within the deal. I don't know, like, have you raised capital for these deals, or is this just simply, you're probably much faster when you have your own money, right? And you're using your own money to put the down payment or whatever, right?
Yeah. So how do you come up with those clauses for the offer? Oftentimes, a good real estate agent knows what those clauses are. because quite frankly, they have a system where all those clauses are templated. So you simply just tell them, I want, I need an inspection clause, I need a financing clause, I need a lawyer review clause, I need this and this and this and that. And they generally have them in their system. They have thousands of clauses for thousands of terms. So they're already pre-templated. So a good real estate agent will provide this. You don't need a lawyer. Then the lawyer should review it. If it's a big deal, then get your lawyer to review it before you get it accepted. But if you're doing an LP, GP, or some complex legal structure, you don't need to take care of this in the offer stage. You only need to worry about this when you're about to close the deal, so that you know how you're going to take title and ownership of that property. You want to buy it in a corporation? Do you want to buy it in your name? Do you want to buy it under a GP/LP structure? Do you want to buy it under a charitable company, like a charity? And this will become an asset for the charity. So there's many different ways to do it, but you don't need to worry about this at the offer stage. Only worry about this when you're about to close and you talk with your lawyer and your accountant on how to structure this properly. So yeah.
Okay, awesome. Yeah, those are some amazing points. I know we're coming to the end here, but where can is there anything else that you want to add that's sort of on the top of your head that you've been sort of itching to say or anything like that?
Yeah. So we're now in fall 2020, and a lot of people are asking, just online or just asking me directly, what do I think is going to happen with the market, with the real estate market in Ottawa? And so I think that my 2021 forecast is that, 10 years ago, was the prices lower or higher than they are today? What's the answer?
I'm not too sure.
The prices were lower.
Oh yeah.
So in 10 years from now, do you think the price is going to be lower or higher? I think the price is going to be higher in 10 years. So the question is, if you're a short-term investor, like try to buy in and flip, then you got to look at what the market is doing. But if you're a long-term investor, it's always a good time to buy a property. There's a saying that says it's time in the market, not timing the market. So you got to buy and stay with that property for a long time to really benefit from it. But regardless of this, I do think that right now is a great opportunity. My 2021 forecast is that housing prices are going to continue to go through the roof, and multifamily investment properties value and demand for them is still going to continue to rise. So I'm definitely seeing increases in value in both those assets for sure. Yeah.
Okay, awesome. So I know we're coming to the end here. So where can people find out more about, your personal brand and so your company and what you guys are doing if they're, interested in maybe, bringing a deal to you, or they're interested in investing with you guys?
Yeah, absolutely. So, we have a website. So the website is called buildinginvestments.ca. So buildinginvestments.ca. I have a business Facebook page that I'm most active on, where I share some insights, we share some posts, we share some current projects, we share some discussions. So that's what I'm most active on is on Facebook. We have a business LinkedIn as well. We share some stuff there. But quite frankly, if you have questions, just reach out to us on the website, or just reach out on social media. I would say Building Investment, Facebook is probably the best way to reach out for just business questions. I'm a normal person, so you can reach out as well to me personally if you want to. It doesn't really matter. info@buildinginvestments.ca. That email will come to me, and then I'll be able to help out if there's any way I can help. Yeah.
Okay, awesome. Well, thank you again, Nick, for coming on the show.
Yeah, my pleasure, Max. It was a lot of fun, and hope to see you again very shortly, my friend.